All right, so welcome back to Trials and Tribulations. Usually you see me on this side and Larry on that side, but today we're changing it up because we have our guest here, Eddie DeAngelis. Eddie is one of our brokers, one of our marketers, one of the people that we work with to help us get loans on the Idea Financial side. He's also become a friend. However, as you can see from our contrast today, he has the Phillies shirt on. I have the Mets hat here. We brought him into town to go to the Phillies-Marlins game, so he just came from the game. First of all, how was the game? Did you enjoy it? Phillies win?
First of all, thank you for having me. The game was incredible. Phillies won, of course, 4-2. The seats were amazing right behind home plate. We're like literally part of the game.
Yeah, it's great. We have great seats at the Marlins game. Being down here in Miami, even though I'm a Mets fan, I do go to a lot of the Marlins games, and it's a sad time for the Mets right now. So obviously the Phillies are doing much better, but I still have this hat here because I couldn't possibly come into this podcast and let a Phillies fan sit in this chair without it having some swag from the Mets here. So I still love you, and it shows that even with the hatred between these two teams, we could still be friends. So
Absolutely.
It works out well. So I wanted to talk to Eddie today a little bit about the process with which a small business ultimately obtains a loan from a company like Idea Financial or LevelEsq. A lot of times on this channel, we talk about the legal loans. And in the legal area, we don't use a lot of brokers, a lot of people bringing us. We do a lot of that marketing directly to the law firms. But on the Idea Financial side of our business, we are heavily reliant upon brokers who are our partners that bring us these small business owners to match them up with the right lender. And you have a lot of experience. Just tell us a little bit about your background as it relates to being a broker, how you got involved in it, and how your career has sort of evolved.
Yeah, so I worked with small businesses for about 17 years. I was in the screen printing and embroidery business and did very well. So worked with small business owners for about 17 years, and I transitioned into finance in 2013. My t-shirt company got acquired, and there was an opportunity on the table to jump into the finance industry. So in the summer of 2013, I started with a company called BizLender.
Wait, hold on. You went from being in t-shirts to being in lending?
17 years, yeah.
Kind of an interesting transition, right?
Yeah, absolutely.
Was it because you were a small business owner yourself? You had some understanding of it that you decided you wanted to do something to try to help those folks figure out how they can deal with their finances?
Honestly, at the time, I was 46 years old, and being in the screen printing business, I just felt like I had something left in me. There was another path. It's like another calling, and the opportunity came up. A friend of mine was in the business and offered me a position he was on the personal lending side in payday lending, and there was federal laws that were passed years ago that kind of put that business not where, off the map, and they wanted to get into the business financing side of it. And they reached out to me. They wanted me to come run the company, start a broker shop from nothing. And we did that in 2013. We started a company called BizLender, and I stayed there for about 3 years, learning the whole business inside and out, learning how to generate leads, how to market the leads. Just built the business up from the ground floor.
And 10 years later, you're still doing it. You've gone through multiple iterations, right? So I think what people don't fully understand who are out there looking for loans, they think of companies like Idea Financial, like our company, or by the way, you have to mention your company's name. You got to plug it.
Qualifi.
All right. So they think about our companies as maybe being larger than what they really are. But at the end of the day, we are ourselves. I consider us a small business. We have 50 or so employees. We're not some huge behemoth bank. And so I always tell folks that I understand a lot about what they're dealing with as an accountant or a pizza shop or a restaurant or a construction company, because we have a lot of similarities and we face similar struggles.
Totally.
Similar to you, who's also running a small business. So you had to sort of build that in the same way that your customers are doing that.
Absolutely. And my own personal experience, I've started like 5 different companies from the ground up with no capital. Going back even before the t-shirt company, I was in selling general merchandise and costume jewelry and clothing. So I had a few businesses before, so I know what it's like and the struggles that a small business owner, when they're trying to bootstrap a company with not much capital. Leading into the finance, I did sidetrack a few times in a good way. So I left BizLender in 2016 and started my own broker firm, which was called Amerifi back in 2017. Stayed there for about 2.5, almost 3 years. And then we were fortunate enough to get acquired by NAV Technologies out of Utah. As you know, the story, I stayed with Nav for about almost 3 years and then left and started Qualifi.
Right, and for Qualifi, we've been working with you through each stage of those businesses. I believe that
Absolutely.
we first met you when you were doing the work with Amerifi, and then Nav, who's still a partner of ours, and now Qualifi.
Yeah, when you guys first got into the industry, I think closer to 2017 is when I found you guys.
That's right.
With Michael at the time, and then we signed on and you've been one of our best lenders since.
Yeah, and so it's interesting because you deal. We're the lenders, so we have our own set of qualifications, and you deal with all different types of lenders. So when you're talking with a small business owner and you're trying to figure out what the best place is for them to be, what they need, and what will meet their needs, are you actually working as an actual consultant, or are you just placing applications in different places? What can a small business owner expect when they're working with
Yeah,
Qualifi?
I love that you say the word consultant, because we like to look at ourselves as consultants, because we take a very comprehensive approach to our upfront from the very first discovery call, where we want to learn all about the business, what their needs are, what they're looking for, how much money, what type of term that's going to work for the use of funds, whether it could be, a lot of clients come to us, their clients are paying late, right? The accounts receivable, everybody's net 30. They're not getting payments for 60 or 90 days, and sometimes even longer than that, depending who the customers are. So they're looking for like a short bridge where a line of credit would work perfect. I'd like to say that probably 70% of Qualifi's business, close to 70%, is lines of credit. And fortunate for Idea Financial, one of the most sought after products is a line of credit like yourself. And there's not many in the market today that works as good for business owners, that they can utilize the funds, pay it back in a month or two, and only pay a month or two's worth of interest.
But your business is interesting because one of the things that's been difficult for us, both for Idea and Level, and I think a lot of companies struggle with this, is how to allocate marketing spend. How do you make sure that the money that you're spending on marketing is going to bring you a return on your investment? For us, the calculus is a little bit different, because when we put the money out there, we haven't made $1 yet. We have to hope that we get paid back, right? So we have that risk associated with it. And when you put on top of that a marketing expense, you really start to increase the costs and the expenses. I think that's why brokers have been so prevalent in the industry, because you all are able to really operate as a marketing and consulting company. You're not risk-based, and then you can send us the leads, and we don't have to spend the money necessarily on upfront marketing costs. You guys make that money back on a commission.
Yeah, I still like to say we are risking, because we spend upwards of 50, 60K a month in the marketing spend. So we're driving traffic to the in-house sales team of funding managers, so we have to close deals, right?
Right.
In many cases, we may not make money on the first funding. It might be the renewal book, right? So it takes months to have, as you know, clients come back 2, 3, 4 times. So it's super critical that when you bring the leads in to close the deals, that you have a good, competent sales team behind you. So we really emphasize a lot in the upfront training and onboarding with all of our reps. We do product training, lender training, sales training, and we want our guys and girls to be able to handle everything that comes across the table and really find a good fit for the client.
In one of our more recent episodes, Larry and I were talking more as it relates to lawyers and law firms about the difficulty that now exists for that particular industry in getting qualified leads, because it is no different. I mean, a law firm or a lawyer has to get, personal injury case, commercial case. So a lot of times they're doing marketing and marketing efforts to try to get those leads. They have to qualify them, and then they have to convert them, and they have to make sure that they're going to make a return on that investment. And so you put it well by saying that your company on the marketing side is taking significant risk because
Absolutely.
You're putting that upfront investment out there. Without getting into like your secret sauce, what have you discovered over the course of the last 6 years as being the go-to strategy that has worked for you to make sure that you're able to get those leads and convert them and create profit for the company?
It's a great question. So, there's a saying in our industry, he who has the leads has the gold. And
we say he who has the money has the gold. So it goes both ways,
absolutely,
right?
Yeah.
But in yours, I understand where you're coming from. So keep going with what you were saying.
Getting truly qualified leads. And I've never been a fan for shared leads. There's companies out there like LendingTree that sells a share lead. They sell it for maybe $60, $70, and it goes to 4 brokers. You're immediately in competition. I've always been one to be able to find creative solutions, creative ways out of the box to generate exclusive leads. Like one way, which I mentioned to you earlier, is we do a lot of email marketing. We do a lot of that in-house to our existing database, and we also have outsourced agencies where we're generating new unique leads that are not in the qualified database. So we do a lot of emailing, we do a lot of texting. there's other sources where we're doing some paid ads. We do some organic, we're very active on LinkedIn. We do some paid ads on LinkedIn and on Facebook. But there's really no one secret sauce. If you said to me, what's been the most successful since I've been in the industry, it's always been the email marketing. And the reason I say that is we're able to catch the client when they may not be in that shopping cycle, when they're already talking to 3 other brokers, and it's kind of more of an exclusive where you catch them when the timing is right. And they'll say that, you're like, hey, you got me right at the perfect time. I'm about to purchase a new building, or I'm about to, I need $300,000 because we just won a new contract. So I do like the idea of trying to get that exclusivity, and we get that with email and text message marketing a lot.
Well, it's again, trying to, because I like to talk a little bit about the analogies between what you're doing, and not just in the small business, but we like to focus a little on the lawyer side as well. The competition that now exists, because the consumer is so much smarter than they used to be, and there's so much more information out there. When I was practicing as a lawyer more than I am now, and I was trying to get new cases, there wasn't as much, I guess, information available, let's say on the internet, or, you weren't Googling for your lawyers the way you are today.
Yeah.
But now if somebody gets a recommendation for an attorney and they talk to that lawyer, they may go out and seek out 3 or 4 other options to see who's going to give them the best deal, who's got the most experience. They're going to shop.
Absolutely.
And likewise, you guys are putting out marketing dollars and trying to capture those leads. But how do you differentiate yourself? Because the consumer and the small business owner, they may be talking with 3 or 4 different brokers and getting their applications out in multiple different places. What is it that Qualifi is doing, and what are you doing, Eddie, to try to create your company to be something bigger and better so that people want to stick with you?
Yeah, that's a big question, and there's not one specific thing.
Hold on, my Mets hat fell.
It's a little.
I can't have this displayed the entire time. Go on ahead.
It's a little bit of everything, right? Like you said, buyers now are so much smarter, and they're coming to the table. They're coming to us with so much more information, right? And one of the things is that it's up to us, being on the discovery call, really asking the right questions, asking the difficult questions, diving deep to see where they are in the journey. Are you working with anyone else? Is there any offers on the table that we should know about?
So you're doing this, you're actually having a phone call and a conversation with every person that comes to you initially as a lead to try to talk about what their needs are?
Yeah, so as leads come in...
takes a lot of time.
Absolutely. Yeah, and we're chasing them down. Every lead isn't like, need the money today, so they're not calling you back. You're following up. We have a very thorough process, day 1 through day 5, when we're calling, emailing, texting, multi-channel approach. We have some automation built in with email and text messaging. We're adding some marketing and some credibility as part of that. We call it in-process flow for live leads. And it's all about conversions, right? It's about what's going to convert the best. Luckily for us in our industry, as you know, as you mentioned, it's probably the most competitive that I've seen it since I've been in the space, since 2013. Every deal is in competition. What I was going to say is, luckily for us, every day there's thousands of new lenders popping up, new broker shops popping up. And, most of the competition, not all, are only selling the MCA product, as you know.
MCA, for those that don't know, that's the merchant cash advance, more of the traditional credit card processing type. Well, it's supposed to be credit card processing.
Yeah, but now they do ACH debit out of business bank accounts. MCA will refer that to like higher risk clients, and the commissions are large in that area because the interest rates are significantly higher. So a lot of brokers come into the space and they're only selling that product, and that's one way where we can easily differentiate ourselves at Qualifi. We have so many more options, like Idea Financial's line of credit. We do 5-year term loans, commercial mortgages. We have a lot of different resources, purchase order financing, accounts receivable financing. So typically we have a home for almost every deal, and we're able to get creative and putting structures in place where you may need more money than the business actually qualifies for, and we may be able to couple a term loan with a line of credit where we've done in the past, and it works really well. So it is a lot, but that's how we kind of separate ourselves, and our credibility, our reviews, and like you guys, 5 stars on Trustpilot. We haven't had a, knock on wood, we haven't had a negative review in a year and a half. Our reviews are all from true funded clients.
That's because nobody's defaulted. If you're lending money and you won't give them the money, or they default, then that's when you get a negative review. So we definitely have some of those.
Yeah.
But I try to respond to those to really set them straight.
Absolutely, you have to.
Our team works hard, and I think that they deserve like the good reviews. The bad reviews are typically from people who have side issues that they're not really being completely forthright. But in thinking about the overall industry itself, what we've noticed both on the law firm side and on the small business side is that because of the I guess it really started with the interest rates rising and then the bank collapses for Silicon Valley Bank and First Republic, that banks have had to add to their capital. So they're not lending as much as they used to, which really creates an opening for the non-bank lenders like us, which should, I guess, in turn, open more opportunities for companies like yours. Because what I'm seeing, and tell me if you agree or not, I think the economy is doing a lot better now than people anticipated it was going to at this point in time. I think I see less of a chance of a recession. Maybe I'm being a little rose-colored with my glasses, but I'm trying to see it objectively. And if that is the case, and then the banks had to pull back because of the concerns about a recession, does that not open up so much more opportunity in the non-bank lending space?
So I'd like to say yes, because I was with you with all the banks extremely tighten up, especially coming out of the pandemic. Their real estate portfolios are getting hammered. So the banks really aren't there to support small businesses today. So you would think that would trickle down right into our industry. And over the last, I'd say 3 to 5 months, I think the economy's been somewhat volatile, where banks are pulling back and a lot of businesses are, I would say, maintaining, but not necessarily in full growth mode when the economy's actually booming and doing really well. So I've seen a slowdown on our side, but it does seem like you're saying, I think we're coming out of that, like going into August and into Q4, I think it's going to start really picking up.
So throughout, is it all of 2023 that you think things have been, do you think it's slow, or do you think that small business owners are more hesitant to even take on debt because of the rate increases?
You hit it spot on. So we had an amazing Q4. We were in full growth mode, ready to bring on 4 more funding managers. We had a great January. And then since February through July, we've been like kind of very stagnant.
We're talking about the fact that the interest rates themselves are now a deterrent for small business owners to borrow money. But what I find to be interesting and sort of confusing about that is in the non-bank lending space, where we are doing a lot of our work, interest rates were already high. And our company, Idea Financial, has some of the lower rates in the industry, but I'm not going to lie to anybody and say that they're low. They're more in the range of what you would typically see on a credit card. I think a lot of people don't realize, because they don't look at their credit card statements as often as they should, that credit card rates are typically in the mid-20s to lower 30s. But if somebody found out they were borrowing money at the mid-20s to lower 30s, they would be blown away by that idea.
Yeah.
But most people are. But then you have the merchant cash advances, the term loans, that if you really annualize those interest rates, have always been
APR goes into the hundreds,
80 to 100%.
Some of the deals go well up into the hundreds.
And that hasn't changed. But I think what has changed is, since the banks have been in the spotlight and the Fed has been in the spotlight raising rates so publicly, and it's become something that isn't just known by intellectuals, it's not just known by people in the Fed, it's known by everybody, that it gives the impression that if you borrow money now, somehow it's going to be far more expensive, and that may be holding people back from taking that leap.
Yeah, I don't think the interest rates hurt us as much. But however, what you mentioned, though, which we're seeing exactly, is I've seen a lot of clients that are getting approved for what are really good rates in our industry outside of commercial bank finance, which I'd say is low teen, simple interest rates. Just clients just not pulling the trigger. Like you said, they're apprehensive to take on debt right now. And that's what we've been seeing for like the last 3 to 5 months, where we're getting really strong approvals that would typically be rushing. How fast can I get the money? Now they want to think it over, and they're just waiting. They're in standby mode, it seems like.
Have you had any conversations with these folks to sort of get an understanding as to what the mindset is, what's causing them to be hesitant? Is it a concern about the economy itself, or is it a perception that because now the Fed is publicly raising rates on a monthly basis, that somehow that might be trickling right down into those non-bank loans?
Yeah, personally, I think it's more about the economy, because I'm on a lot of the calls too, especially a lot of our larger deals. I work in and I help the reps and jump in and help out on some of the calls on the back end. And it just seems like they're apprehensive to take on more debt. I think they want to wait until the economy levels out. They're not in growth mode. Like we're losing, I think 50% of the world takes money because they're doing well and they're growing, getting new contracts, they're looking to hire, invest in marketing, invest in tech. I think that's leveled off a lot, and I think that's where we're missing a good piece right now. And on the other 50% that borrow because they really need it, there's been a lot of free money that's been shoved into the economy from the ERC, and that took a nice chunk out of the pie, right? How many millions or billions have been sent out of free money?
Man, if I get one more phone call from some guy on a recorded line trying to offer me the employee retention credit, I'm going to change my phone number.
I get them every day myself.
I mean, my God, that's
LinkedIn.
become... I saw an article I think it was a couple of days ago. I think it was on CNBC about some of the fraud that's gone on with the ERC. And I feel like it's being perpetrated by all these companies that are using it for robocalls. They're trying to convince people to take it. I mean, even PPP wasn't as widely advertised as the ERC is. It's a constant barrage of phone calls. And I think you're right. I think that's probably playing into why people are not looking to get actual loans, because they have this perception that they're going to get the free money.
Waiting around for free money.
But that free money's got to stop eventually. I mean, I don't want to get too political, but at some point you got to recognize that the free money is what's really causing the interest rate rise, the economic problems. You know, it's actually the reason why the country was almost put into a recession.
Yeah.
But you're still seeing it. I'm still getting phone calls on a regular basis. Do you guys participate in providing the ERC?
We do. We jumped on that boat recently. I didn't want to jump into it when it first came out. It's very late, and I didn't want to jump into it because I thought it was going to be a very short-lived thing. But now there's still a lot of business owners we talk to. They haven't even applied, or some of them are approved. And as you know, it takes 6, 8, 10, sometimes 12 months plus to get the money. So there's a few lenders out there now that are doing bridge loans on the approvals up to like 85% LTV.
We were asked to do that at one point. I just shied away from it because I have my hesitance about getting involved in providing bridge financing on what we think we're going to get later. I just think there's so much risk involved there.
Yeah, you never know.
We just said no thank you. We just decided to stay out of it. But I think my belief is that coming into 2024, you're going to see rates drop. And even when rates are dropping, I don't necessarily think that companies in the non-bank space are going to adjust their rates dramatically. But you have to believe that just the public perception of a better deal on money, so to speak, is going to add a little fuel to the economic fire.
Yeah, I think the economy is definitely going to turn around through Q3, Q4, and into 2024, like you're saying. Personally, I don't think the interest rates have really gotten worse in our space. I mean, going back a couple years ago, the interest rates they've gotten a lot better. There's lenders now, like you guys, that are going out 2 and 3 year terms. Interest rates in the mid-teens when you're speaking about simple interest. Mm-hmm. So that wasn't around 3-4 years ago. You know, they started in the high 20s.
Because competition requires it, I think.
Yep.
You know, it's like when we entered this market, we were trying to find something that was different, because like you said, it's a highly competitive environment. Everybody's offering a similar product. So we were trying to find something that, because I don't come from the lending space. Like you said, I'm a lawyer by trade. And so I didn't know a whole lot about the way that structured finance worked, about the way commercial finance worked. So we just said, okay, what can we do that's not being done? And so we just tried to recreate what looks more like a bank loan, because I don't like the idea of just like shoving money in small business owners' face that don't need it. Like if they don't want $100,000 and they only want 10, take your line of credit, take 10, and then come back to us later when you actually need it. That's really the theory behind what we're doing. It seems to have worked. But at the same time, we still see, at least when we're looking at it, huge growth from some of those lenders that have been doing it the same way for years. There's still so much opportunity out there and so many businesses that are looking for cash.
Yeah, tons of market share out there to be had.
Have you looked into legal lending at all?
I have not.
No? Well, I mean, that's something that obviously we focus on. And my belief, Eddie, and I hopefully I'm proven right, is the legal lending space is in a similar position today as the small business lending space was in 08, 09, and 2010. For whatever reason, lawyers have been looked at as being non-bankable to the small business lending folks. They call them restricted industry or whatever. We never looked at it that way. And so I do think that the opportunity is there. And my prediction is that folks like you are going to be on that train within 18 months, because there's huge opportunity there.
Typically, there's plenty of lawyers out there, and typically they're, good pays, good credit individuals. So I think it's a great industry to continue to fund.
For sure. Well, it's good having you on the show.
I appreciate it. Thank you. Thank you for having us.
Let's go Mets. I will come up to Philadelphia for a Mets-Phillies game at some point. I'm hoping I won't get assaulted and
maybe
killed.
Maybe a playoff game.
The Mets aren't making the playoffs for years, but maybe at some point. I just hope I don't get assaulted, because Philly fans have a reputation for not being the friendliest.
Not very nice.
Maybe you'll protect me.
Absolutely.
Thank you for being on, man. Appreciate it.
Thank you for having us.
Thank you for joining us. This episode was sponsored by LevelEsq.